Hello traders, you are welcome to this video. So in this video, we are going to be discussing one of the best confirmation indicators. Okay, so irrespective of your strategy, yeah, sometimes it's good to have just additional confirmations. So it doesn't matter if you are using a strategy that does not rely on indicators, or whether it's a strategy that employs a couple of indicators, or whatever the strategy may be. Yeah, so the RSI is the indicator we are going to be discussing in this video. The RSI is a momentum indicator, the relative strength index RSI is a momentum indicator that can help you identify overbought and oversold levels, can show you the strength of a trend, help you to gauge your momentum and all of that. So this indicator is one of the most widely used indicators, and it is quite effective, although it is not foolproof. Okay, so we're going to be looking at this indicator and how we can use it to confirm our entries and how we can use it to confirm our exit and all of that. So basically, whether you are using price action to determine your entries and exits, you can use the RSI just for additional confirmation. Or even if you are using other indicators to determine your exit and entries, you can use the RSI also for additional confirmation. Okay, so now we're just going to be adding up the RSI to our chart. As we can see here, you go to indicators, your oscillators and relative strength index, right? Okay, you can just use the default settings, right? Okay, so now after adding the RSI to your chart, you can just leave the default settings like I already did, which is the 14 settings, okay? Which means that it calculates the average of the last 14 periods. Yeah, that's what it means. It calculates the average of the last 14 periods to determine the strength or weakness of the market, okay? Now, the RSI, like I already said, it helps identify overbought levels and oversold levels. Now, the default settings is 70 and 30. Above 70 shows overbought, below 30 shows oversold. Okay, so this is a sell zone and this is a buy zone. Now, when you are using the RSI for confirmation, basically we are going to be combining price action with this. So let's say we are trading with trend lines, with horizontal support and resistance zones, right? And basically candlestick chart patterns, candlestick patterns, okay, candlestick patterns. So now we had a buy signal here because this is a trend line, and we had a first touch, we had a second touch, and then at the third touch, this would have been a buy signal. So now we look at the RSI. The RSI ought to be pointing upwards. If we want to confirm our buy, the RSI should be pointing upwards. It may or may not be in the oversold, but it should be either in the oversold pointing upwards, or it should be comfortably not pointing downwards. I don't know if that makes sense. But for example, this would have not been a good confirmation because it is still pointing downwards. It is still trending downwards. So if your RSI is not in the oversold, you want to confirm a buy. If your RSI is not in the oversold, if it is in the middle, for example, then make sure it is either sideways and pointing up, or in fact, it should be trending up even if it is with a gentle slope. It should be trending up at least with a gentle slope, as we can see here. So this is going to be a confirmation that this buy is probably valid, because right after the price got close to the trend line and began to reverse, we can see that the RSI was pointing up and it is trending upwards. So this is like a confirmation, right? And then here again, we had another touch on the trend line. We even had a bullish candlestick pattern form here, and then you see the RSI again is pointing up. And in this situation, remember that it is this one we are using to confirm, not this first pointing up, because there was a little bit of a sideways movement before the RSI now began to point up. So you should have at least a little sideways movement, or you should have the RSI trending upwards, or you should have the RSI in the oversold and pointing upwards. Okay, so now we had a confirmation here as RSI was pointing upwards to confirm this buy. Okay, now let us look for a sell confirmation. We can see that this was a horizontal resistance level, and then we had price being rejected, and then we looked at the RSI and we saw that RSI was already in the overbought level, and the RSI was already pointing downwards, signaling a sell. Okay, this is a potential sell opportunity. So we would have used this as a confirmation for our sell signal here. Okay, now another thing that the RSI can help reveal to traders is divergence. Divergence for extra confirmation. Yeah, the RSI can give divergence signals. It occurs when the price makes a new high or low, but the RSI does not. Okay, this can signal a potential reversal. For example, if the price is making higher highs, let us look for such example. Yeah, if let's look for such example. When the price is making higher highs, but the RSI is making lower highs. Okay, let's just see if we can find such example, right? Let's just see if we can find such example. Okay, I think we have one here. Yeah, we can see that the price made higher highs for a bit, while the RSI made lower highs within the same period. Okay, we see it aligns within the same period. Okay, so this shows this is a bearish divergence. It suggests weakening momentum and a potential sell-off. Okay, when you're having higher highs, but the indicator is showing lower highs. So this is a bearish divergence. It shows a weakening momentum and a potential sell. And you can see eventually the price sold off. Okay, so the RSI can help give you confirmation of a potential sell when a buy is probably coming to an end. So it kind of confirms that this divergence signal confirms that that buy is probably coming to an end, and then you see that you could have a resistance level, your resistance line too around there. So your resistance is telling you that price could get rejected, and the divergence is also telling you that this buy opportunity is probably coming to an end, and a possible sell trend is about to commence. Okay, so basically that is it. The RSI can help you identify both entry points, exit points, and all. So once the RSI returns from extreme levels, for example, let's say you entered a sell trade, right? And then the RSI enters the oversold territory. Yeah, it goes from 70 to 30 or wherever it was before it enters the 30 territory. So it can tell you that that sell is probably coming to an end. Okay, on the other hand, if you enter a buy and the RSI gets to the 70 level, it can tell you that that buy is possibly coming to an end. Okay, so supposing you're analyzing the chart and the price is approaching the key support zone, and you just see a bullish engulfing candle, but you are not sure if the reversal is genuine. Yeah, so now you can check the RSI, and it's below. If the RSI, for example, is below 30, confirming oversold conditions. You see now that situation now gives you additional signal because you saw a candlestick pattern, a bullish engulfing, for example, and the RSI was already in the oversold territory. And then at the same time, perhaps let's say price was around a support trend line or maybe a horizontal support. So this adds to the confirmation, and then you can more confidently enter your buy, set your stop loss appropriately, and then take profit appropriately as well and manage your risk properly. Okay, so by combining RSI with price action, you have a powerful system to filter out weak signals and make more accurate, consistent trading decisions. So I hope you found this video insightful. Kindly like and subscribe for more trading insights, and don't forget to hit the notification bell so that you will get updated on more trading videos. Cheers and happy trading.